One of the most common sayings in cryptocurrency and investing is when in doubt, zoom out. And that is exactly what we're going to be doing in today's video, going over the macro, midterm, and small time frame charts discussing the next move. By the end of the video, you should have a well-rounded and deep understanding of exactly what the price action is doing and exactly what to expect next. Let's get into it. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day. In today's video, we're going to be going over the macro charts, the monthly, the weekly, the daily, and even the small time frame charts, discussing every single chart from a technical and structural perspective, going over exactly the key and relevant information you need to understand what is happening and what is going to occur. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post the most objective and factual technical analysis on the entire platform, focusing on the facts, data, technical and structural information, relevant economic news and news events. No hype, no BS, no emotion, pure, raw, honest TA. That is the kind of content you're interested in. Join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, Bitcoin, and of course the economy. If you're interested in joining our trading channel, this is our VIP channel. We post exact trades with exact entries, exact targets, exact stop losses, and justification. If you're interested in joining that, go to the free channel, click the pinned comment, go to the top, and you can find all that information, including our entire trading track record over here. Not only will you get access to our trading channel, where I post all my trades, but you'll also get access to our trading charter education group chat, where we teach you guys how to trade, we develop your trading skills, and so much more. Go ahead and check it out. Let's get into the video, starting off with the market data. And as we have seen, the overall volume, the overall volatility, the overall momentum has been relatively low and has been decreasing over the last few weeks. And when we start to see these metrics behind what basically indicate the strength of price action fall, there is a greater probability of rejections or decreases in price at these key macro levels. The key macro level at the moment being that $32,000 level. We've been telling you for weeks, guys, we've seen the momentum fall. We're seeing discrepancies between the RSI and the price action. We're seeing volatility drop. We're seeing volume drop. And we told you for weeks that 32,000 was unlikely to break on that first attempt. We were likely to see a rejection, which we have now seen play out. Do not look at the price of the asset. The price of the asset is less important than the data or what is reflected in the strength of the price action. If the price goes up, but it's going up on low volume, it's going up on low volatility, low momentum, it is likely an exhaustion rally. It will likely correct. These are things you have to look at. I pay much more attention to the technical data, such as the open interest, the cumulative volume delta, the momentum indicators, than I do the price action itself. Watch those key levels. They tell you a lot. Learn how to read them if you don't. Looking at the liquidations, we can see liquidations have fallen 23%, sitting at 39 million. Relatively low for liquidations, but overall, not too much price action has actually developed in the last 24 hours. Looking at those liquidations, still majority of the liquidations coming from those long positions over the short positions, about double liquidations in the long side as the price has corrected from that major liquidity zone at 29.6. If you remember our video from 2 days ago, we said we were in a rising channel. We expected a move towards 29.6 and then a correction through it. So far, we have seen that play out. So far, we are actually seeing that develop on the chart, and it is currently playing out as we speak. So fantastic stuff so far. Moving into the higher time frame, let's take a look at the DXY. The DXY has seen a strong move toward the upside, bouncing on the critical support. Zoom out, take yourself back a few days. What was everyone saying when the DXY was here? They were saying the dollar is going to zero, the markets are going to fly to the moon, and the DXY is going to die. We have to treat support as support until it is not. We have to treat resistance as resistance until it is not. If we're looking at the two most significant levels on this chart. It is going to be number one, the low level of support, and number two, the downtrending diagonal resistance, the same resistance we have now rejected on 5 times. If we want to see the markets correct aggressively on a higher time frame, not just a daily, not just 5 days, we're talking about weekly strength, flipping bearish, we need to see the DXY move upwards. And it's not that the DXY moving upwards results in the market correcting, it's what drives the DXY to move upwards that causes the markets to generally correct, because the overall systematic risk in the market will have shifted, which is reflected in the overall price of the DXY. So we are watching the DXY as an indication for the general perspective or situation in regards to the overall market environment and risk for risk assets. Moving on, the S&P 500 is still at this upper level over here, deviating, not expecting too much, more or less watching to see how that plays out in the short term. We still are expecting that price to correct toward the downside. Moving on to the Dow Jones. Again, same thing happening over here, guys. We're finding local resistance in these resistance zones. We've seen a nice weekly break upwards, which resulted in a nice strong move to 35,000, which expected, and we have not really seen any push higher than that right now. We do need to start making some new highs over here, particularly over these levels to continue upwards. But again, I'm not really expecting too much, and I'm definitely not sitting here trying to predict what is happening on the stock market. I don't really care too much. I'm much more focused on Bitcoin. Let's go ahead and get into Bitcoin then and discuss what is happening. So, starting on the macro charts and then breaking it down to the smaller time frames, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Today, we have a very important event occurring very soon, and that is going to be the monthly close. The monthly close is in 3 days and 21 hours from now. The monthly close by itself is by far and large not the most significant event, but it is a very important event if we go ahead and apply it to a context of the overall weekly trend. So let's go ahead and take a look at the monthly chart in context to the weekly chart, and I'll tell you why it's important. If we take a look at the monthly chart and we have the 4-year cycle overlaid over here, 4-year cycle being our day range trend of bear markets, our reversal zones, and our bull markets on our horizontal scale over here. The key levels on the monthly chart, ignoring the 4-year cycle, are going to be this horizontal red line and this horizontal dotted line. These 2 lines are present in every single cycle. If we take a look at the first cycle, we saw this horizontal red line act as a base of support for around about 1 year before finally breaking down and resulting in overall capitulation towards an absolute bottom. If we look at 2018, we saw the same thing. Around 1 year of support, a breakdown, capitulation towards an absolute bottom. If we look at 2021-22, we saw the same thing. Around 1 year of support, a breakdown, capitulation towards a absolute bottom. If we're taking a look at that same horizontal trend line, going forward in time, every single time we have seen a monthly candle close above that level, we have actually ended up heading towards that dotted trend line. See, in our instance in 2016, that occurred. In our instance in 2019, that occurred. In the instance of 2023, we have seen the monthly candle close above 30,000. we have yet to see the move to 48k, which will be that dotted trend line. If we're looking at the Gaussian channel on the weekly chart, this is where it gets very interesting, and this is why the monthly candle is actually quite important. If we're looking at the same date range of when we had the monthly candle break in comparison to when we broke the weekly candle over the upper band of the red Gaussian channel, it resulted in a strong impulse upwards to retest that respective monthly dotted trend line before correcting. If we look at 2018, we saw the same thing. We broke a weekly candle above, we continued upwards, we retested that dotted trend line, and only then did we correct back under. If we look at 2023, we are more or less completing the same thing. However, we are seeing one particular thing different this time than we have the last two times. We are seeing exhaustion and technical weakness above the upper band of the Gaussian channel, which, if develops, will result in a breakdown of the upper band of the Gaussian channel, and therefore an invalidation or failure to complete the similar pattern we have seen in the prior two cycles. And that could, by far and large, either number one, push Bitcoin into a new downtrend, or number two, extend or delay the move upwards to that dotted trend line by X amount of months. So a very important monthly candle. The reason why the monthly candle is important is because if we close under 30,000, the probabilities of us going down to retest or break below this level significantly increase. If we're looking at the weekly chart, we have to take a look at what the indicators are saying and suggesting in regards to this active and apparent weakness we are now seeing on that weekly chart. So let's go ahead and delete all this and move back to the weekly. One particular indicator I like to use when I look at the overall direction of trends and shifts in strength of trend is something called the RSI. The RSI is a momentum indicator. If you've been trading for a while, you probably would have heard the RSI is one of the most key and fundamental indicators, and probably one of the most basic indicators people use. But here's the thing, majority of people use the RSI wrong. We're looking at overbought, we're looking at oversold, you're using the RSI like an absolute bot. You're doing it wrong, you're following the crowd, you're going to get wrecked. You have to look at what people are not looking at. You have to use it in your own particular way. How I like to use it is I like to use it in confluence of charts to indicate points where momentum has shifted from, not from positive to negative, but from strong positive to weak negative, to weak positive, and from weak negative to strong negative. These actual shifts in directional strength can infer where the price could be going next. So looking at the RSI, we have a particular horizontal level at 22.09. Every single time we have lost 22.09 from the top side down, we have seen a market correction. The correction has spanned between a full-blown bear market, a 70% correction, to a mid correction around 40%, and even these smaller corrections we have seen around 20 to 30%. But every single time we have seen it in the last 7 years of price action, every single time we have lost that level, we have seen a correction. In fact, we have actually recently lost that level. We zoom into the chart only a few days ago, we actually broke back below it. Where did it occur? Guess what? It occurred at 31,000. What happened? Since then, the price is down 7%. These momentum shifts are incredibly powerful. So the RSI shift is indicating we have negative momentum, we have strengthening negative momentum on the weekly chart, which could develop into a weekly downtrend. When will the weekly downtrend start? The weekly downtrend will start once the price loses its weekly uptrending support level. The weekly uptrending support level currently is sitting as per this diagonal trend line. Now, if we take a look at that higher time frame chart again, we can see the Gaussian channel upper band is only sitting at 28.4k. The weekly uptrending support line is actually sitting a little bit lower. So why is the 28.4k level more significant than the uptrending support line? Well, here is the thing. It is not more significant, it is equally as significant. Losing the 28.4k level will signify a shift in high time frame strength. And if we have weakness moving into support, just like if we have weakness moving into resistance, the probabilities of a negative outcome increase. And thus, if we see the price drop below 28.4, the probabilities between a bounce upwards and a correction downwards move in favor of the correction downwards, guys. Pay attention to what the chart and the data is telling you. The price of the asset is less important than the metrics, the actual metrics. What is the price strength doing? What is the strength of price action doing? What are the metrics doing that move the action, that direct the price? What are they telling us? And they're telling us right now the price is losing strength at resistance, and therefore the probabilities are not in favor of a move upwards. How can the bulls reclaim strength? Let's go back to the weekly chart and then we'll go to the smaller time frame. So there is one particular chart I've been looking at I want to show you guys today on the daily chart. This curve is called a parabola. This is our overall parabolic curve. We have been in this parabolic curve for quite some time. Not only does a parabolic curve represent an overall curvature of the price action and therefore direction and trend, but it also represents a trigger point on where the trend could potentially break from a dynamic perspective. This is going to be that downtrending blue line. If the price is able to reclaim and push over that downtrending trend line, that will most likely send the price upwards. If we take a look at this parabola and say, what is the measured move target of it? We're looking at a retest all the way down at 22.5. Worst case scenario, we remain underneath the parabola and move to 22.5. Best case scenario, we break above the parabola. That will result in a continuation to hopefully break 32 and a macro continuation upwards on the monthly chart. So watch out for this, watch the parabola if we're looking for trigger points on where the bulls can reclaim control before 32K breaks. So again, I'll say it one more time. The parabola trend line, the curve, is an important level to identify a point of which the bulls can reclaim control and shift the probabilities in favor of a break upwards past 32 before the break of 32 occurs. Let's go a little bit deeper into that notion. Breakouts, bulls reclaiming control before the price breaks upwards. So if we take a look at the short-term price action, guys, we have what we would call a very traditional horizontal channel. If you've been following the video channel for a while now, the last 4 or 5 weeks, if you're new here, if you're new, congratulations. But if you've been here for a few weeks and you're watching this, you would know we've been talking about this channel for quite some time. In fact, this is a very traditional horizontal channel with top side deviation and a very traditional breakdown. We have seen that occur. In the process of this, we have developed a downtrending resistance. This is our current downtrend, represented with a little arrow at the bottom to show you guys. Our current downtrend. When we are in a downtrend, we have to assume the trend will resume until the trend is broken, and therefore the downtrend will resume until the price is able to reclaim and break over that downtrending trend line. If we take a look at it on the 4-hour chart, we can use our technical levels as confirmation. We saw the RSI break upwards, we didn't have the price break upwards, we reached one of the 2 validation points, and therefore we had a false break on the RSI, therefore this was not a strong attempt. What we are looking for is the price to break above plus the RSI to break above to get double confirmation in price action and therefore a high probability of the bulls pushing the price upwards. If we see the price break above the downtrending resistance here, we are very likely to push to retest the 30,300 to 30,400 POC level. This is an incredibly important level for the bulls. The bulls need to get the price over 30,400 to flip the strength from dynamic weakness to strength on the high time frames. Whilst we remain underneath this level, this horizontal level on the small time frame, we are very, very likely to continue this downtrend of weakness towards 28.4. 28.4, as I represented, was the upper band of the weekly Gaussian channel. 28.4 itself is a key level of support. We could definitely find support on 28.4 and bounce. In fact, that would be the bulls' best hope, right? The best case scenario for the bulls would be a bounce to 28.4 and then eventual continuation upwards. The worst case scenario would be a loss of 28.4 because that is when we enter a daily downtrend. We are in a daily downtrend under 28.4. We are in a weekly downtrend under 26.8. And of course, we are in a high time frame downtrend underneath 25.2. Let's go ahead and reiterate. High time frame downtrend underneath this horizontal range. Weekly downtrend underneath the uptrending support line. Daily downtrend underneath 28.4. Those are our levels, guys. Watch out for them. Moving back to this chart before we end up the video and go into short term, if we do assume, hypothetically, we're going down, we're crashing, we're going to blow up and go down all the way, how would we play that out? How would it occur? What would the targets be? Well, number one, let's hypothetically say Bitcoin has come down and is over here right now. Let's say Bitcoin's right over here. Say Bitcoin's already broken down. What would be the measured move target? Measured move target would be our high to our low, potential inverted head and shoulder, applied to the breakdown, $19,000 will be the maximum low we'd expect. The best case scenario, full support, would be around 22.5 to 22K if the breakdown actually occurs. If the breakdown doesn't occur and the bulls reclaim control, and we told you how the bulls can reclaim control, remember, we showed you this chart here, we told you we do need to get a momentum shift, the bulls can reclaim control and push upwards, then of course, guys, we're looking for a break upwards, because look at the range over here. Between 32,000 and 38,000, the VRPV is suggesting a range of low historical resistance. A low resistance range. In a low resistance range, the volume requirements for the price to move upwards decrease. If we are pushed through a major resistance into that range, we're likely to have positive momentum. If we have positive momentum and our volume requirements are lower, what happens to volatility? Volatility skyrockets. When was the last time we saw something like that? Over here. We just saw it in the opposite scenario. Let's flip the chart. Let's show you. We saw the opposite thing play out. We had that same volume gap. We pushed upwards in. We broke out of that downtrending resistance. We pushed upwards. Volatility skyrocketed. Price skyrocketed. We're seeing the same thing play out on the inverse, guys. It all plays out the same way. Watch the data, watch the charts don't lie. Let's go ahead and finally end up the video discussing the short-term price action, the next immediate move, and exactly what is going on the charts. So we have seen an official breakdown of our rising channel formation. A measured move target of the rising channel formation would take Bitcoin to retest the low points at around 28,000. We're looking around 28.8. Now, here's the thing. 29K is a significant level of support. And just one thing, guys, it is so hot in this room. Australia is bloody hot today. I'm almost dying. So I want to wrap this video up quickly so I can get some water. But 29K, guys, right over here, absolutely insane stuff. This is a very key level of support. We can say our local over here. If we lose 29K, like I said, we're very high chance to retest this level here. But if we're retesting this level here, we can see we have almost no support. There's almost no support in this range whatsoever. If we scroll back in history to see where we came up, we've got almost no support in this range whatsoever. The next level of support is going to be that 28.4K represented by these local top points. And therefore we can say with a higher degree of probability, if 29K is lost, there's a much higher chance the price actually goes straight towards around 28.4. Thank you for watching, guys. I hope you enjoyed today's video. We didn't get to cover the short-term technicals. Again, there is a lot to discuss on this stuff, and I can really talk for hours. I think I'll quickly go over it. Momentum is falling, right? Momentum's dropping. Our open interest is generally falling. Our CVD is dropping. For the price to reclaim strength, we need to start breaking above this downtrending resistance. Until then, any short-term strength should be scalped, shouldn't be swinged. Do not look for reversals until that happens. But I'll be the first one to say, guys, if this happens, I'll be the first one going bullish again on a small time frame and swing trading upwards, because that is what the chart suggests. Do not hold bias, do not hold preference, do not expect the market to reward you for your ideologies and ideas. The market doesn't care. Trade the trend, be calculated, be decision oriented, and be factual in your analysis. And most important, be honest to yourself. You know when you're in a trading that's going wrong, you know not to move your stop loss, you know to take the loss and move on. You know when you're at a huge profit and you're doing excellent and you see a massive wick upwards and you're like, yes, I made another 20%. You know to take profits, but you choose to not. You choose to let fear and greed get the best of you. Focus on yourself, fine-tune your emotions, be calculated and decisive in your decisions. Treat trading like a job, not like a gambling addict treats the casino, okay? Horrible ending, but I hope you enjoyed. Thanks for watching. Be sure to like the video, guys. If you're here on the channel, if you're watching to the end, I know about 40%, 30% of you are. Like the video. It helps get my content out to new viewers. And of course, my goal is to become the most trusted and reliable source of education in regards to trading and technical analysis on the market. As a lot of you guys know, I was a trader. Well, I still am a trader. I've been a trader for about 7.5 years. I've been a trader well before I started YouTube, well before I started Telegram. That's all it has to say. That's all I need to say, guys. A lot of people in the space jump up only after on Twitter and Telegram and then become traders. We've been here well before all of that. Thanks for watching. Catch you guys on the next one. Cheers.